Hello and welcome to another episode of Market Analysis. I usually do these analysis every week. Consider subscribing and liking the comment if you find it useful. Starting us off today looking at the economic calendar. Last week we did receive CPI numbers and PPI numbers which came out relatively good in terms of inflation cooling down in the United States of America. Looking at crude oil inventories, they came out negative, which is good. The lesser the deposits in terms of oil reserves, the better the commodity does perform. On Friday, we did have UOM consumer sentiment, which actually came out better than forecast at 60.5, meaning investors in the United States of America are looking at positive outlooks of the economy in the near future. This week is going to hold quite the activity, starting us off today with the Chinese yuan. We did have their retail sales coming out earlier on during Asian session, whereby it did beat market forecast, whereby we were anticipating 4.9%, and actually the numbers came out really good at 6.4%. Tomorrow we are due to anticipate the Bank of Japan releasing their policy rate. We do anticipate them to hold the interest rates currently at 0.5%, and this data is usually tentative but comes out before Asian session does close. Later on in the day, we are going to have retail sales. We are forecasting 0.2% from a previous number of 0.1%, and this is going to have a very big impact in relation to what the tariffs have been doing to the economy of the United States of America. Wednesday is going to be the highlight of the week, starting off with the British pound, whereby we do anticipate their CPI numbers coming out. Forecast is at 3.3%, looking at inflation coming back down towards the 2% region, of which is the target of the central bank. Later on in the day, we do have unemployment claims, but the highlight of the week and the day is going to be the federal funds rate. We do anticipate the Fed Reserve to hold the interest rates at 4.5%, but the highlight is going to be the FOMC press conference, whereby we do anticipate to hear from Jerome Powell what he has to say about the tariffs, the ongoing wars, what is the possible outlook of the financial markets in the near future in relation to interest rates. On Thursday, starting off with the Asian session, we are going to anticipate New Zealand dollar having their GDP for the quarter. The numbers are forecasted to come out at 0.7%. At 4:30 a.m. local East African time, the Australian dollar is going to have their employment numbers. We do anticipate the unemployment rate to remain constant and the unemployment change to come out at 19.9 thousand, which is quite a significant drop from the 89,000 looking at previous numbers. The Swiss franc is due to have their monetary policy assessment and their policy rate come out. They are anticipated to lower the policy rate, which is going to be quite interesting in the financial markets. At 2 p.m., the British pound is going to release their official bank rate votes. Last time we did see two members opting to decrease rates. It's going to be interesting seeing what numbers are going to come out in terms of their 9-member policy rate change. It's going to be a holiday in observance of National Independence Day in the United States and the New Zealand region. On Friday, we are going to conclude with the retail sales from the British pound, and at 9:40 a.m., Bank of Japan Governor Ueda is going to release the speech. Switching gears to the commitment of traders, starting off with metals, looking at the short format. With the commitment of traders, we did see almost a similar number of positions being offloaded from longs and short positions, but net long positions on gold are quite high. If you look at the charts of XAUUSD, you can see that gold is trending net long on the higher time frames. Copper has been very interesting of late, whereby institutions have started picking up net long positions on the commodity, while at the same time they did offload almost 3,220 short positions. Now, looking at this information, institutions are favoring copper going higher. Commodities aside, let's go into the financials. This is whereby things get very interesting. Looking at the Canadian dollar, institutions added 2,431 long positions, but at the same time they offloaded massive in terms of shorts, whereby at least 6,171 shorts were offloaded and covered, meaning institutions are favoring the Canadian dollar being stronger in the long run. Looking at the Swiss franc, almost 1,424 positions were offloaded from longs, but at the same time, 4,164 positions were added to shorts, meaning institutions will be favoring more selling opportunities in the Swiss franc. Looking at the British pound, 2,897 positions were added to longs, and at the same time, only 34 positions were offloaded from shorts, meaning institutions are looking at the British pound being slightly stronger in the long run. The Japanese yen, on the other hand, being net long, looking at the amount of positions they do have in terms of the longs are quite significant compared to the shorts. When you're looking at the changes, only 464 positions were added to longs, but at the same time, 68 positions were added to shorts. Looking at the euro, 441,000 net long positions and 121,000 net short positions. But looking at the changes, 2,900 positions were offloaded from longs, but at the same time, 3,000 positions were offloaded from shorts, meaning institutions are neutral in the euro currently at the moment. Looking at the Australian dollar, net long positions are only 39,000, but at the same time, the shorts are nearly 72,549. Looking at the changes, 346 positions were offloaded from longs, but at the same time, they favored adding more selling opportunities. Looking at the numbers standing at 1,118 short positions being added. New Zealand dollar, 374 positions were offloaded from longs, but massive shorts were offloaded as well, looking at 1,600 positions being offloaded from shorts, meaning institutions are neutral when it comes to the New Zealand dollar, although slightly positive, because whenever you have massive offloading on short positions, you anticipate a short-term recovery on the currency. South African Rand, only 12,644 net long positions and 3,069 net short positions. Looking at the changes as of from June 3rd to June 10th, we did see almost 1,400 positions being offloaded from longs, but at the same time 289 positions being added to shorts, meaning institutions are currently selling the South African rand. Looking at the S&P 500, this is whereby things get very, very interesting. Looking at the net long positions, we have 1,091,000 positions on long and 262,000 on short. But looking at the changes, this is whereby things get very interesting, whereby we do see almost 5,232 positions being added to longs, but at the same time, 7,226 positions being offloaded from shorts, meaning institutions are favoring the S&P 500 moving further to the upper side, even beating all-time highs probably. Switching gears to the Nasdaq, 92,721 long positions. At the same time, we do have 38,897 net short positions. Looking at the changes, only 659 positions were offloaded from longs and 70 positions added to shorts. Looking at the Russell, almost 9,000 positions were offloaded from longs and almost 3,000 positions being offloaded from short positions, meaning institutions are slightly neutral, although they are favoring more towards selling opportunities when you're looking at the amount of long positions being offloaded compared to the amount of short positions being offloaded. Looking at the US Treasuries 10 years, very interesting data to be looking at. A massive offloading is currently going on the long positions of the 10-year treasuries, looking at almost 16,955 positions being offloaded from longs, and at the same time 16,186 positions being added to shorts, meaning institutions are currently dumping the treasuries in the United States of America, which is quite interesting to be looking at. Looking at the US Treasury 5-year note, same similar occurrence happening whereby institutions are offloading massively on their long positions, while at the same time they are significantly shorting the US 5-year treasury notes. Bitcoin, this is the price. So one of these values is going to indicate at least 5 Bitcoins. Looking at institutions, they did add almost 146 positions on Bitcoin. This is almost nearly $100 million being added to long positions on the Bitcoin and almost roughly 50 million being added to short positions on Bitcoin. Switching gears to technical analysis, starting with gold. Looking at gold currently at the moment, we're trading at $3,415 an ounce. Price action last week, we did tap into the highs that was formed back on May 6th, and then the markets closed slightly below that region. When the markets did open today, we did see some bearish sentiment in the financial markets, but this could be just a move to the downside, gathering liquidity for the market, possibly attacking the all-time highs that we did form around $3,500 an ounce. If I was looking at speculation, especially looking at the tensions in the Middle East, I will speculate the prices of gold moving further to the upper side because of the safe haven sentiment that is coming with the precious metal. Whenever there is economic uncertainty, geopolitical tensions, usually investors rush off to safer havens. Looking at silver, already it has started its route. Last week we did see silver making all-time highs at $36.89 an ounce, which is the farthest, the highest silver has ever been to, and we are on the trajectory even moving further this upcoming week, whereby I'll anticipate prices of silver, if it does break 38 $36 an ounce, I'll anticipate a break to the upper side, a retest of the region, and then a further push to the upper side, whereby I'll be looking at long opportunities on silver in the near future, trailing my stop loss, because whenever prices do break all-time highs, when the ceiling is broken, the sky is the limit. Looking at the dollar index has been very bearish of late. Looking at sentiment, whereby we did have this support region being broken last week, the market retraced and there could be a further move to the downside looking at the dollar index in relation to other US denominated pairs, whereby we have seen a weakness as a result of this. The volatility index jumped almost 22.8% from Thursday heading to Friday when Israel did attack Iran. When the missiles were sent, the volatility index flew with it accordingly. Looking at the volatility index today, it's come back down almost 5%, but the geopolitical tensions are still very high in the Middle East, especially when investors are looking what the United States are going to do in terms of supporting Israel in the Iranian war. The S&P 500 the index almost lost 2% of its total value as a result of the geopolitical tensions in the Middle East. Looking at price action, I do still anticipate the S&P 500 is going to be stronger, and there's a very high likelihood we might attack all-time highs. Looking at price action, we are only 2.24% away from all-time highs on the S&P 500, whereby I'll anticipate prices moving further to the upper side, breaking all-time highs, retracing, and further opportunities to the long side. I'll start trailing. I'll chase this market, whereby I'll look at buying opportunities currently at the moment so that the bandwagon doesn't leave without me. Nasdaq, similar occurrence happening, whereby the markets did have a short-term retracement on Friday as a result of the attacks in the Middle East, but the markets are currently adjusting, reacting, and we might see the Nasdaq, which is a tech-heavy index, moving to all-time highs also. Moving over to the Dow Jones, prices did hit a resistance around 42,800, and I would want to see how the markets are going to react to the closing price of today. But looking at the candle currently at the moment, I'll anticipate prices attacking Friday's opening price and further moving to the upper side. Similar occurrence happening to the Russell. The Russell has been very positive of late. Looking at the lows, we've come back ever since April, the start of April. The index has gained almost 30% of its value since Trump did took over office, and then there were implications of tariffs around the world. Treasuries, looking at treasuries, as we have seen from the commitment of traders, institutions are offloading massively on US treasuries, and I do anticipate these numbers to continue moving further to the downside, whereby institutions are losing They're losing so much investor confidence in terms of the long-term treasuries in the United States. Brent oil, we did have a massive breakout, a retest on $68 a barrel, and then the market shot further to the upper side, coming back to these regions of inefficiencies that we did have around $73 a barrel. Looking at price action currently at the moment, prices is respecting that inefficiencies, and we might see further opportunities to the upper side, whereby I'll want to look at long opportunities. Ideally, oil going back to around the $80 a barrel territory, which is quite achievable, which is quite doable. And this is a market that could really push to those numbers if the Middle East wars continue. The same thing can be said about the WTI, especially looking at how this candlestick is playing out at the moment, coming back down, gathering liquidity. If we do respect the closing price of Friday, I'll anticipate this market further moving to the upper side. We did have a take profit hit last week on US oil, and I do anticipate these numbers continuing moving further to the upper side, beating or targeting $80 a barrel in the next few trading days. We did see Bitcoin tap into 110,000 last week. Then the crypto lost almost 6.7%, going back down to $103,000 a Bitcoin. But currently the market is regaining, and if the tensions still continue to ongo, this could be just much more fuel for Bitcoin to beat all-time highs currently at $112,000 a Bitcoin. USD Chinese yuan, ever since we did hit the highs back on April 10th, which was one of the highs that was made the last time prices was there before April 10th, was back in September 2023. Then we did see a massive sell-off on the US dollar against the Chinese yuan, implying that the Chinese yuan was slightly stronger as a result of the tariffs. Switching gears to currencies, Euro USD, we did tap into 1.15624. Very interesting. The market closed above that region, but on Friday, when the geopolitical tension struck, the markets dipped slightly down. Currently, we are breaking to the upper side, and I'll anticipate this market continuing moving further to the upper side. British pound against US dollar, and I would want to see how the markets are going to react to this region. If we do break to the upper side, I'll look for retracement back into this region for a further push to the upper side. But at the moment, if we do close below this region, I'll look for selling opportunities. But I'm going to lean more to buying opportunities, looking at institutions on the commitment of traders. The British pound is set to be slightly stronger in the long run. British pound against Japanese yen. This I'm going to put a hold to it until we do get the Bank of Japan releasing their policy rate, which is going to happen later on during the week. Then I'll anticipate looking for informed decisions on this market. But looking at the moment, we are currently in this channel, and I would want to see how prices are going to react to this region. I would anticipate if the Bank of Japan lowers their interest rates, we will anticipate further selling opportunities on the Japanese yen, which means that the British pound against the Japanese yen is likely to be stronger in the long run, anticipating the prices could come back to 199.73 if you can round it off to a psychological number of 200, which I'll anticipate the number coming back to the 200 mark. Swiss franc, we did find support around this region. If I can highlight it, the market respected that region. If we do get some bullish sentiment whereby we do get a change in state of delivery on the lower time frames, whereby the markets restart rejecting this region aggressively, I'll look for buying opportunities to the upper side. That's going to be it for me. In any case that I'll enter any positions, kindly consider subscribing to my Telegram and my WhatsApp channels, which are totally free, whereby I do share the trades that I am in currently, the reason why I enter the positions, and what is the most likely targets that we are going to be looking at. Have a peaceful week, have a blessed week. May God protect you, may your enemies respect you, may death neglect you and your families.